Well, good morning, everyone. Welcome to today's live stream. Super glad that you're here this morning. My name is Tyler, and I'm going to be helping navigate you through the wild world of day trading futures. And today is going to be no exception. Today is going to be a wonderful day of price action. We have some news today, so buckle up. It's going to be a good time. If you're watching this after the stream, you can jump to the key moments using the chapter markers below. And lastly, if you are looking to take your trading to the next level, you can use the code DTJ and get anywhere from 50 to 90% off your next Apex evaluation account using the code DTJ. Currently, Apex is doing an 80% off sale, so you can get 80% off your next evaluation account. That's $29 for a 25K account and $33 for a 50K account. And that is what's going on right now with Apex. Other than that, guys, we're going to go ahead and open up in prayer. And then let's check out and see what's happening today. So, Father, we just honor you this morning. Thank you for the opportunity we have to trade as traders. Father, I pray for a blessing over those that are on the stream, that join the stream, that you would have with us here this morning. I pray a blessing over them, that they would see increase in their lives. They would see blessing at the fruit of their hands. Father, I thank you that we choose to speak life over our trading. We choose to speak prosperity over our trading and not death. Father, we thank you for what you have for us today. We honor you and give you the glory. In Jesus' name, amen. So, you know what I was thinking today? Some people might wonder, why do I pray every morning? And I don't pray because I want to have a great day. Because how many times have I prayed and I've not had a great day? Or I've had mistakes in that day. I pray because I want to dedicate what I'm about to do to the Lord. Whether it's a successful day or an unsuccessful day in the eyes of others. I pray because I want to do everything that I do to be honoring to the Lord. And for Him to bless those that are here. So that's kind of the idea behind that. Jay Hong, good morning. Ted, Tony, D Hamby. Is that how I said D Hamby? I hope I said that right. Good morning. Good morning. Good morning. Okay, so let's go ahead and let's see what we got going on this morning. Let me get my screens set appropriately. And we're going to take a look at the market. Ted, you're wondering what do we got for news today? Well, let's check it out. I did put it in the Discord, but right here we have 7:30 we had retail sales. 10:30 cash rate, RMB rate. Am I looking at the right one? I'm looking at the wrong one. 8:45 is all we had this morning. Chicago PMI. I wonder if I do this here. Chicago PMI, I think, is all that we really had this morning. But it was news here at 9:45 or 8:45. 9:45? That'd be 8:45. So we have news coming out at 9:45. But it's yellow folder news, so not much attention. We got some relatively equal highs on the 1 minute. You can see that also on the 5 minute right here. We have just these relatively equal highs right here. We swept these highs right here. And we made a low of day currently right down here at 725. Now, this is not going to be on your guys' charts, but this black line right here is 19,076.25. If you go to the continuation chart, NQ1 exclamation point, and you look left on the daily and weekly time frame, you will see a swing low sitting at this level. So I've put it on the current contract chart, but it's just, I mean, it's just pointless. You try to look back, you got a bunch of dots. It's pointless. So the only way that we can look back is by going to NQ1, select the continuation chart, and then we can see what the continuation of the chart is looking like. And if we plot this level right down here, that comes out to be to 19,076.25. So I'm keeping an eye on that level particularly to see if we want to sweep that level, stop short of it and move higher, or if we want to just blow right through it. Jumping back to the contract NQM. My focus this week is going to be on a couple things. I'm only allowing 2 losses per day. So if I have a second loss, I'll be done with trading. I'm going to be focusing on trading my plan. Also, I'm planning on reducing size and expanding my stop loss. When I was journaling and I was looking back at my trades, I noticed that some of the trades that I've taken were winners, but I would get stopped out simply because I was so focused on having a tighter stop loss that it ended up hurting me. So we're going to expand that stop loss, and the only way, if I want to keep the same risk, the only way I can make a larger stop loss is by reducing my size. So we're going to go down to 2 to 3 micro contracts currently. Right now, we're going to see if we can I'm going to see if I can get a system figured out with that, and then size up accordingly from there. That's the plan. No impulsive trades, only premeditated, predetermined, pre-planned trades. No impulsive trades, no trades taken off the flashes of a candle. We saw what happened last week in my trading with that, so we're not going to allow that this week. Something that I want to encourage you guys on that I think I want to talk about is, I'm going to be doing a video on this, but I want to talk about journaling and some of the tools and resources that I've touched on a little bit on stream, but we're going to talk about that a little bit more in this live stream because I'm finding it very, very helpful on just articulating my thoughts and everything. So we're going to go over some of that. But right now we're in the pre-market. Market is opening in 6 minutes, and we just want to be ready. We got our opening range, our opening range gap that's sitting right here. It's a decent size range. We got from 412 at the highs down to 199. So that's 212 handles or 212 points. Now, one of the things is when we see a large range like this, there's a higher probability that this does not get filled. So I'm looking at potentially the upper portion not being filled and just looking at half of or even a quarter of this being filled. And that kind of overlaps with this equal high and with the London high sitting right here. So I would like to see something like that to be filled. We'll see if it wants to do that here. But we do have that sell side liquidity at the bottom on the continuation chart. We'll see if what it wants to do here with that. As far as what I'm looking for potentially on the hourly, we just have this consolidation. So it's not really pretty here. We're having sweeps of liquidity, but then it just closes inside the range and doesn't expand one way or the other. We're expecting New York to really break out of that. But right now, if we are looking, this hourly candle has 34 minutes to close. If we close this hourly candle, lower, and we start seeing expansion here, that we could see an hourly continuation entry on the hourly chart and using the 5-minute chart for our entry. We'll see if that wants to play out here this morning. And then we have the 30-minute, which the 30-minute played out here at 7:30 this morning. The entry was between 8 and 8:30, and it ran for these highs right here. That played out this morning. I did take that trade. I did take just a piece of that trade this morning. The entry was on the 3-minute chart, and the entry was right here at 8:30. That was the entry. And then at 8:30, being the entry, you see that it swept the highs, and so that played out to at least to the point of liquidity, it grabbing liquidity. Let's see, equal highs with fair value gap on the 15-minute look delicious. Jay Hong, all right, I like it. Apex news feed, it doesn't show the past news events. Good size opening range gap, good plan, good morning. Watching the 15-minute BISI. MR, good morning. Yeah, if we go down to the 15-minute, did I mark that? I thought I marked it. We do have this 15-minute right here that it looks like we might be closing through. I think that's the level that Ted mentioned. Yeah. I thought about trading this right here, but I ended up just saying, you know what, let's just let it play out. Pre-market, it may consolidate. It didn't. It started expanding lower. So got 2 minutes till market opens. We just swept liquidity here. For the 930 model, we're looking at a bullish entry. Do we want to take that based on what we're seeing here? I don't think so. I mean, it could give it to us, but we did sweep liquidity here. We could see price come back. Actually, I bet you we come back up to this level here, to this breaker. I bet you we could hit that breaker. If we are heavy and we're wanting to drop, I think we could come back up to that breaker. What does the 5-minute look like? 5-minute would have a fair value gap sitting right here. So I could see us coming back up into that 15-minute. Yeah, easily. I'm only going to take it if this candle is green and it's moving the other direction in a big way. If it's not, I'm probably not going to take it. It just doesn't make sense to try to go long in that. You know what I'm saying? It just doesn't make sense. I'm not going to put undue risk on something that doesn't look probable. Doesn't mean it can't work, but the structure isn't just setting up for the 930 this morning. Let's see what happens. So 930 would have worked. I'm going to take a trade right there and see if we stop right at this breaker. See if we can get 10 handles. Well, that's 20. There'll be 20 handles right here if it closes. All right, that was a 20 handle trade. We got 20 handles off that breaker. We called that breaker off. That was part of the plan that I liked, set up for it to sell off. We saw the push higher directly to that. So at this point, I want to see this sell off right here, at least to these lows. See if it can give us at least to this low right here. Beautiful. All right, there it is, folks. That trade idea did play out. I did sell at 20 handles instead of waiting, instead of holding it. But nice little trade there. Nice execution. Can't complain about that. I mean, you could end your day right there. You could call it a day. We'll see you guys later. Just kidding. We're going to hang out. Looks like a market maker sell model. Exactly, Ted. That's kind of what I was thinking. And we have this level down here that I really want to see it hit. So let's go ahead and mark out 930. And I mean, you can tell it's running there anyway. Nice little breaker. Ted, did you take that breaker? JB, yeah, for the most part, it's easy to set up. It takes a little understanding. Let's just say that you need to follow the instructions exactly. Following the instructions, you'll get it set up. Somebody asked me to do a video on my setup for TradingView and for TradingView. So I will go ahead and I will be doing that. All right, so there's that low that I wanted to see it hit. Let's see what happens here. If it just, honestly, with where the market's at, guys, I really think we could continue a sell-off. I mean, we're talking like a large, higher time frame market sell model. I think we could go all the way down here. Oh, let me see here. This is the weekly time frame. The weekly is showing up. Let's mark that out. So the weekly is giving me on the contract, it's giving me a different level, which I'm going to go ahead and mark. That level here is 19,026. I think that is more appropriate than this other level that I gave. Simply because the weekly time frame is showing better structure than it was on the 15-minute. So let's see if it keeps going down here to that level. I mean, it looks like it is. Taking a trade here would be an impulsive chase, so I'm not going to take that. I'm just going to watch all this drop. I got 20 handles from this. I can't complain. Yeah, I don't know if we're going to see an upside, Ted. I mean, I like the idea of an upside, but I mean, it would need to be right here. This is that level. There's on the weekly, there's nothing else. The daily's a mess. The weekly, the monthly, we got a monthly wick here. Let's see if that's the same. Yeah, the monthly candle, September's low is the same as the weekly. So we've ran that level here. So we have two options on how the market could react to this. We could see a V. We could just see a V-shaped recovery from this quick drop right here to these lows. Or what the first thing that I'm watching is this very first fair value gap. How do we handle this first fair value gap? Do we find support or do we reject it? Are we just going to stay underneath it for a little bit? We want to watch that that first fair value gap here. This is right 931. And then we also need to mark out our first fair value gap for the week, which is right here. It's a very large one, decent, very obvious one. So we want to watch this as well. So if we're going to just run right through this level, we have two other fair value gaps, which makes it hard to trade to the upside. So we have a 3-minute. You would really have to jump to the 3-minute if you wanted to do that, but I just don't. I need more structure for that to happen. Just like Ted's saying. Could be a Judah swing, yeah. And it's on a key level that we've identified on the weekly time frame. So this is a weekly low from September, a monthly low for the month of September as well. So we could see us run to those equal highs. Somebody called that out, the equal highs. Who mentioned that? That would be a low-hanging fruit target, and then we'd have the London high and then the midpoint of the opening range gap sitting right there. So we want to see all of this. So we have a lot of room for price to potentially run. That's 250 handles, 245 handles. Let's just say our goal is to get 30 of it, 30 to 40 handles of that. So we just need to wait for a good entry to give us an opportunity to take that trade to the upside. So price did not close above that fair value gap, but instead it closed inside of it. So what that tells me is I need more information. We could just do something like this till 10 o'clock and then start moving. We could do something like this and then sell off more at 10 o'clock. So 10 o'clock I think is the key time that we need to keep an eye out on and see how price wants to react at these levels at that time. Yeah, I mean, how many times have I seen a beautiful breaker, Ted, right off the open? This is one of the few times I've identified that breaker pre-market and came up with my plan for it to hit that level and then sell off. So when it actually did it, I'm like, I'm going to take this. I mean, it's obviously moving to the downside, and if we're going to go green, man, I'm going to go short because that's my breaker. That's my setup right there. So got 20 handles on that. That was a nice trade. Now I wish I would have not sold it. That would have been nice. Let's see. I got in right here at the breaker. I mean, that would have been 160 handles in like 4 minutes. I've been having a hard time with my desktop overheating. I just replaced the fans on it to see if it would improve, and I'm not seeing any improvement, so I got to figure something out. Put this nice huge fan in there and it's still not performing. Ashutosh, do you have access to real-time data? 100%. It's the only way to trade. Should I buy the plan of TradingView with real-time data? No. So here's what I'm going to say. There is some perks with using a prop firm. like Apex, when you use Apex, they provide the data for you on Trade-Evate. So you could trade on Trade-Evate, pay $30 for an Apex account and get free data, trade on Apex or trade on Trade-Evate. Or if you want to use TradingView and you're on demo account and you're not ready to do any Apex or any prop firm cash, then 100%. If you want to learn effectively, you need access to real-time data. If you don't have real-time data, you can't. There's no way for you to improve your trading. Zero. You can learn strategy based on historical data, but it's not something that I would be. You're going to want to take what you're learning from historical data and applying it to real-time data. That's really what you want to do. So I think you will need something like that. On a weekly perspective, I really think this could be, I mean, this is me speculating, but how nice would it be, or how convenient would it be for this to make equal lows here, come back up, rebalance some of these levels here, and then see a sell-off again from that level. To me, it would make sense to call this equal lows in the eyes of retail traders. Oh, look, we're finding support here. Let's go long. It's going long. It comes back down. No, let's go long because it's support here. No, it runs right through it and continues lower. That's how I would view it. And on top of that, to me, this is if we start moving higher from this point, this would be a failure swing. A failure swing to try to move lower and makes a higher low. So here's our lower low. Here's our higher low. ES made a lower low. So if ES made a lower low, yeah, and NQ doesn't, we'll see what happens here. All right, so NQ makes the lower low. I had a long delay on TradingView when I execute a trade that resulted in a loss. The delays are horrible, man. Sometimes it happens. I would say I think that may be a perk for executing on Trade-Evate. I don't know. I've just gotten used to Trade-Evate, and I don't mind going back. When I do my eval accounts, I'll execute on TradingView, but I really like the charting on TradingView. I more than any other platform I've ever used by far. But I think I can execute on different platforms. I don't think I have a problem with that. Even if we wanted to take a trade to the downside, guys, there wasn't a fair value gap in here at all. No fair value gap, no entry. No inversion, no opportunity, no trade. We can't really trade based on that. It's crazy. We've lost in 1, 2, 3, 4, 5, 6 weeks. In 6 weeks, we've dropped 3,000 points. That's crazy. I have an Apex account connected to TradingView. Does it provide real-time data on TradingView, or only Trade-of-8 platform will provide real-time? I'm pretty sure it's only Trade-of-8. If you want the real-time data on TradingView, I'm 95% sure you have to pay for it. Let me go to my Apex online or TradingView. Yeah, you can use a basic TradingView account for sure, but the question is, do you need real-time data? And I'm 90% positive you do. So I'm looking up I'm on a premium account. Yeah, I pay for real-time data. So here is, let me make sure all my private information here is covered. All right, so here is what I'm paying for right now. It's it's only $5 a month, and it's the Nasdaq Global Index service. I think that's all that I'm paying for. Oh, and then the CME, CBOT, MOX, CMOX, E-mini included. This is $7 a month. So I have those two that I pay for. So $5 and $7. You're looking at $12 a month is what I'm paying for. Hopefully that helps. Yeah, you don't need to go into the second chart. You really don't. I rarely use the 30-second chart anymore. I used to use it for APEX or for my inversion model quite a lot. Yet the problem is I had a lot of false positives, so I just elected not to use it as much. And it means I miss opportunities, but I'm okay with it. There was just I would have more losses than wins because of the 30-second. So my lowest time frame is the minute that I use right now. Here's inversion right here. Looks decent. We have this is our sweep of liquidity right here, and a secondary sweep of liquidity. So if we would run that, it's not a bad move to that fair value gap right there. And that's a lot larger. That's 29 points. Wow. Was not expecting that. How big is this fair value gap? This fair value gap is 20 points. Yeah. Reason I'm downsizing is because of the large. I need to just accept larger stops. So I'm going to take this. If it closes, all right, there's the close. We're going to look at this going to this high right here. And this trade will fail if we close below this fair value gap. So I'm going to move my stop down here for right now. All right, 20 hand. I don't know what that was. What was that? That was 27 handles on that trade right there. 27 handle win on that inversion on the 1 minute. Beautiful trade. Honestly, if it wasn't for this fair value gap sitting right here, I probably would have held it. We need this is the next thing. Do we close above that fair value gap? That's the question. Or do we find resistance again? So that's kind of the idea. And 27 handles, guys, what did we say? If we can get 30 handles off of that 200 point drop, we're good. Out of that 150 point drop, that's all we need. So we just got a winner there. Winner, winner, chicken dinner. Do you guys understand why I said I didn't go hold this longer? We had this fair value gap right here that has already shown resistance. This fair value gap has already shown that price rejected that high. So we are speculating that not only will it want to run this high, but it will want to run these highs in light of there being a fair value gap that was already showing resistance. Now, it could do that, but I'm going to take my profit and get out of there on something like that and wait for a different type of setup to take for a trade like that. Right around 10 o'clock, we'll see what the market's doing and see if we can look for a 30-minute reversal or an hourly reversal. Quite frankly, we can do either the 30 or the hourly reversal, potentially. The main reason is we have this sweep of liquidity right there. So we'll see what happens. So it looks like this may play out. I ended up selling it. It wouldn't have stopped you out at break even, but you for sure would want to have your stop at break even. What is that level? Why is there a line here? I don't know what that's for. Oh, the breaker right at 953. Is that what you're taking, Ted? You taking that breaker right there? All right, let's see it happen. We just swept that high. So for those that don't know what the unicorn breaker is, we have a low, high, lower low. Price runs above it and comes back down into this fair value gap sitting right in here. And that's where Ted went long. We have a 3-minute to the downside. That's not bad. I bet you it showed up, but let's look at the hourly. Tony, the unicorn that he's talking about is right here. So the unicorn doesn't have to have perfect, it doesn't have to have line up perfectly, But the key characteristic of the unicorn is you're looking for fair value gaps on the left and fair value gaps on the right of the breaker. So here's our fair value gap on the right, part of this lower move. Excuse me, that's technically not it. You're looking primarily for the fair value gap on the left that overlaps with the breaker right here. So if I was to go down to the 15-second chart, you'll see it a lot better. So here's our breaker, our low, high, lower, low. Here's our breaker right there. There's our fair value gap on the 1 minute that he took his long in. So see how it's just a little bit cleaner and more obvious on the 15-second? It drops down into the fair value gap, overlapping with this breaker right here. This is the breaker block. You have this fair value gap on the left on the lower time frames. So you have the fair value gap on the left and you have the fair value gap on the right of the breaker. Tony, do you see it now? Oh, that's another thing that I need to do. I need to limit myself to 3 trades. So I'm going to put a new... I'm going to give myself a 3 trade limit. I'm making sticky notes. I've done this quite frequently. The mistake that I've made is once I make them, I put them on my screen and then I leave them there. I think one of the things that I'm going to be changing on my, as far as my morning process, is I'm going to rewrite these every morning. So it's just not on my screen and it becomes part of my background. Have you ever noticed that? When you guys have, you know, let's say you put something up that you want to read every day. Pretty soon over time, that doesn't become your primary focus because now it becomes part of the background of what you're familiar with. So I want to avoid that. So I plan on taking these off every day and then rewriting what my plan for that day is and making it fresh. So it's just not, you know, oh, it's the same plan, so I'm just going to leave it up there. And then it just blends in with the background. But when I have to rewrite it every day and make it a part of my process, then it becomes more, I remember it. It's not just becoming part of the background of my trading screen, my trading setup. When I'm looking, I mean, if I was to take a picture, in the past, I would have sticky notes all around my screen. Like this one right here. This one says, limit orders only. This has been on here for weeks, but it became part of my background and I haven't paid attention to it. So eliminating that opportunity, or should limit that, the only way I know how to do it is by taking them off every day and then rewriting the ones that are going to be focused onto that. And that's going to be part of the journaling thing that I want to talk about here. And we'll talk about it after this macro. We'll see. I want to see what this macro wants to do. We have another breaker right here, pushing higher. Low, high, lower, low. There's the breaker. Looking for the confirmation of this close right here will tell us that we are moving higher. And I might take, because I'm already really green for the day, even with a small size, I'm gonna go down to 1 micro contract, and we're gonna take a micro contract. I want to see this close above this, and if it does, that will be enough. All right. So taking along again, and we're going to take it. Stop is at the low of these bodies, and we're going to go to the 930 opening price. That's where I'm going to target. Let's see if it wants to do that. It's right above the first fair value gap. But I'm doing this based on it being a breaker, and we have the confirmation of the close above these 2 down close candles. So that's my confirmation for the move. This will be a 44 handle move if it hits. I want to see it push right through this first fair value gap. If we reject this first fair value gap, then I'll probably get stopped out. I want to see it push right through it. It's very important that we push right through it. Do I let this play out or do I move it to break even? Gonna move to break even. I think we could go lower, right? We could, well, let's see what happens. I stopped at break even, so.
Order canceled.
Break even trades don't count for me as far as my 3 trade limit. So that's why I have that there. I want to see how it reacts to this fair value gap sitting right here. If you closed yours there, that was a perfect execution. Nice job, Ted. I'm Tyler. What's up? Need your opinion on this. How do you feel about prop firms' consistency rules when trying to pass evaluations? So Apex doesn't have a consistency rule when you pass evaluations. I think it sets bad habits. It forces traders to try to get a big win first day. Yeah, I think I have mixed opinions on this. When you're starting out, you need to treat your evaluation as a real account. 100%. You need to be treating it as a real account. If you're not, you're going to struggle with exactly what you're saying. Your struggle is it's creating bad habits. Once you get to the point where you've had success, something changes and it's something psychologically changes where you can separate the difference between your evaluations and your funded accounts. But when you're starting out, it's new. It's something that's interesting. I think I want to take this. You know what? It's probably going to work, but I'm going to pass. I'm gonna use my will and say no. I'm gonna wait. The main reason is this first fair value gap. If it's going to reject there, we could see it lower prices. And I just don't want to assume that this one fair value gap is going to hold against the first fair value gap of the day. So that's my main reason. Tyler, you're adding some more. But in the type of trading we do, we could have a big move over 100 ticks or even 60 because the market was bad yesterday. I can fully take that entire move. If I think I understand what you're saying is without the consistency rule, in our type of trading, we could have really big moves. And you're saying that you don't like the idea of limiting your profit with these consistency rules that these prop firms are requiring. My response to you would be, first off, tell me if I'm correct on that assumption, Tyler. I'm pretty sure I understand what you're saying. We're watching to see how if it closes. We're watching to see if it closes through this fair value gap right here. That's kind of what we're watching. I elected not to take this trade simply because of the first fair value gap. We could use this first fair value gap as a long, but then we start getting into premium, and it's just like how far in a premium do you want to trade for a long? Here's what I'm referring to. From this swing high to the swing low, we find where equilibrium is. It's right down here, right? It's right where that fair value gap was. So our last opportunity would have been inside of here. So now we're inside premium. You really don't want to go long in premium unless you really believe that the target is much higher. If the target's much higher, let's just say it's the first fair value gap. Let's just say we want to, or the previous day low. If that's the target, well, that means our equilibrium is higher and we could still potentially take this trade long, right? So it's in context of where you see the target being. So here's our close above of the first fair value gap and 930. I'm not going to take that because it's at 930. And quite frankly, I'm 2 for 2, and both of them were 20 and 30 point trades. So I'm up 50 handles on the day. I mean, I don't want to take a continuation trade. I want to take a higher probability that I know something's going to take place. And it's harder to determine if we're going to see a continuation. We're in the middle of a potential range at key levels like the 930 price, right? So I'm gonna elect to sit on my hands here. Tyler, so I am right. So exactly. So let's say I start Monday trading. I make $300. Then that limits the rest of the week no matter how the market is. It limits you based on one day's projections, and it could have been a bad day. No, that's not how the consistency rule works. It's not well, it depends on the prop firm. So I'll speak to Apex because I know Apex really well. I'm looking at some other firms that I want to consider trading. One is Tradify. I'm looking a little more into. I like the idea of going straight to sim. So I'm going to look more into Tradify, which I believe they have that rule where you're limited to your the consistency, but it's based on your biggest day. It's not based on it's based on the biggest day you have. So they have a consistency rule of 20%, meaning if I make $1,000, I need to take $1,000 divided by 20%, and that's $5,000. That means my account has to be at $5,000 before I can make a withdrawal. If your account is at 30% or $300, you divide that by the 20% consistency rule. You would have to have in your account $1,500 before you can take a withdrawal. That's how they handle the consistency rule. Apex is different. Apex doesn't do their consistency rule that way. Apex has a consistency rule of 30%, and your biggest day can't be more than 30% of your starting balance for the day. So let's say your starting balance is $2,500. If your starting balance is $2,500, you divide that by 30%, you multiply that by 20%, 30%, you can't make more than $750 in a single day. So there's different ways people are calculating the consistency rule. Hey, I'm glad I didn't take this Alpha 930. Do you see why? 930 is a important level to note. Now, if we find consolidation inside this first fair value gap and it doesn't, and this first fair value gap stays unviolated to the downside, then we could potentially see it push up and through there, which you could take along once we close back above 930. That might be an option. And then you would run for the equal highs. So when I look at the consistency rule, Tyler, the way you approach the consistency rule is anytime you're starting off with an Apex or any other funded account, you need to start off with small size, period. There's multiple reasons to do that. Number one, you are wanting to make sure you give yourself a buffer so you don't blow your account. That's number one. You don't want to blow a funded account. That's the last thing you want to do. And the best way to do that is to manage risk properly and reduce your size until you give yourself that buffer of $5,000, whatever that number is for you. And then you can start increasing your size. Number two, when you're starting off, you do have more restrictions with the consistency rule. It's just part of the deal. So you have to be willing to play the prop firm game. That means I'm going to abide by your rules. I'm going to sneak past your limits, and then I'm going to blow it wide open and take the money. But you got to play the game. And if you want to be in the prop firm space, play the game. This is part of the game. It's not a restrict. Don't think of it as, oh man, I can't believe they're doing this. To me, and I'm not saying you're doing this, but how many times do you see so many people on the internet complain about prop firms? That is a victim mentality. I'm not a victim. This mentality of, oh, they're doing this, oh, they're doing that, oh, they didn't do this, why are they doing that? This victim mentality, I refuse to live in. You're only going to see failure when you have a victim mentality. Oh, woe is me. Woe is me. Oh, wham, 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 wham. No. I'm going to be the determinant. I'm going to be the one that drives my future. I'm not going to let my future be dictated by some company on what I can and can't do. If this is their rules, I'm going to play their game. I'm going to take control, and I'm going to play the game that they want it to be played and get past it. Once I'm past it, especially on Apex, once you're past above 55 for a 50K account, once you're above $5,500, or once you have created your buffer over $5,000, the consistency rule jumps up to 50%. That's huge. I mean, they take off the guardrails once you build yourself up a buffer account. Once you have that buffer, which is great. I think the consistency rules, the drawdown rules, while they do protect the firm, they also build in good habits of not oversizing and not over leveraging, which is very, very important in my opinion. So instead of playing the victim mentality of woe is me, Apex this, Tradeify that, my funded futures this, wham, 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 I'm going to say, which firm do I think I have the best success at playing their game and then capitalizing and being able to get a withdrawal. For me, it was Apex because I like the low fees, I like the low cost, I like the one-time payment for a funded account, and then I can just build it, and not have to worry about a time frame or extra payments. That's me. That's what worked. That's what's working for me and what I'm doing. All right, so the first fair value gap was just closed below right there. So now I'm looking at it playing inside this range. For how long, I don't know. But we could come back down all the way to this fair value gap, to be honest, and use this breaker a second time. When we look at the 30-minute time frame, nothing there really on the 30. Nothing on the hourly. Well, let's look at the hourly a little closer, guys. Here's the hourly time frame. The hourly time frame has a reversal pattern right here. Here's our swing high. We swing above it and then we close lower, okay? So now we just closed and we're in the 10 a.m. hour. We're 17 minutes in. So if we're going to look for an entry, we can look for a 5-minute fair value gap for our entry. So if we're looking here, here's our 5-minute fair value gap. We're inside that 5-minute fair value gap right now. So if you think lower prices are in the future and the market is showing us lower prices, well then here's your 1-hour continuation entry. Right at the top of that 5-minute fair value gap, it was right there. I think that's not a bad place. If I was looking at the hourly entry, this would have been a great place for an entry. So based on the hourly continuation model, we could see some lower prices in this direction. How can we capitalize that now that we are not in at this fair value gap? Well, you could get in here. You're going to have a 50 handle stop loss, which is not fun. Okay, so you could do one micro contract that would make it a $100 loss if it stops out. Okay, or we can look at a potential bearish breaker to the downside. So we have a fair value gap here, and we have a bearish breaker right there. Okay, so we can let price do what it wants to do, let it close down here, and then come back up to this breaker area, and we can use that as an entry to go lower. And I think I like that idea right now. So what I'm going to do is I'm going to wait until we run and sweep this low right here. And then I want to see price come back up to this level. And then I want to look at potentially playing a continuation lower. Now, I can still play this without it actually running this low. Understand that. I understand that we have this level here on the this monthly key level that we went through and reacted from. So really our look should be for a higher time frame move. So does the hourly reversal make sense in line with us hitting a weekly key level? The honest answer is I would say no. But you probably could take an entry right off of here short and get 20 to 30 handles out of it. That's, I think, a real possibility. I mean, it looks nice. It's rejected off 930. We have a market structure shift. We have a change in state of delivery. All of that is right there. Luke, I'm 90% sure Apex allows making any amount in a single day on yes, that's true on an eval account, not on a funded account. You just can't withdraw until you have 8 days minimum. No. So if you make too much, they have a 30% consistency rule. If you make 30%, you're gonna have an issue. You have an 8-day minimum, $200 profit, and your highest P&L day cannot be greater than 30% of that current day's P&L. I don't know if it's current P&L. It might be current day. So maybe I'll double check on that, Luke. JJB, I think Apex says your largest loss is one trade. In one trade can't be more than $750. That's if you're below your buffer account. So if you're below your initial drawdown range, so if you have a 50K account, a brand new 50K account sitting at $50,000, you have a limit of a $2,500 drawdown limit. If you take 30% of that $2,500, that's $750. That means you can't have on your unrealized drawdown, you can't have in a single trade more than $750 when your stop loss or when your drawdown limit of $2,500 is that level. Now, once you get above $52,500, it's based on your starting balance. So let's say you're at $53,000. Well, now you're going to take $3,000 and you're going to multiply that by the 20% drawdown rule, and that's going to be 30%. Yeah. So if you take $3,000 divided by that 30%, that's $900. So as your balance increases per day, your unrealized drawdown limit also increases. Okay, do you guys see that breaker entry? So we did hit that breaker. It did hit that breaker. It did it before we hit this low, but from that reaction, it gave us over 30 handles. So there's an opportunity right there, and that's based on an hourly reversal candle with a 5-minute entry fair value gap, which is this fair value gap, waiting for the continuation lower, the confirmation, it being the breaker. So see how we're taking two models and putting it into one? We got our hourly reversal, boom, okay? Now, we don't know if the hourly reversal truly is going to run all the way to these lows. It doesn't matter. If the model's there and we see the structure of price presenting as an opportunity to run lower, even though we have a key level, we just got to be a little more careful and maybe not try to get the big 30 handle move or the big 300 point move. Maybe we just go for 30 handles. Now that we swept this low, now I'm watching this again to see how we react to that level and see if it wants to continue lower. It could push up a little bit higher, potentially. Let's see. I'm Tyler. Can you explain Apex a little? I'm under the impression that if you're in a trade and you don't make max and you don't take max profit, that counts against you. It counts against you in the form of your drawdown. So let's just say you're at $50,000 and you're up $1,000 in a trade, but you close it at $500 when you're up $500. You now are going to you're going to be in drawdown by $500 because you didn't close at the max. That's not that big of a deal at the end of the day, because there's no reason why you should lose $2,000 in a trade. So as long as you're consistent and taking those small wins, this is why taking small profits is beneficial, is it limits that opportunity. It limits your potential loss. I've never really had a big issue with it running up $1,000 and then closing below it. You shouldn't let a trade go from a $1,000 profit down to a $500 profit. Also, that whole issue goes away as soon as your account is above $52,500. This is based all on a 50K account. Once you're above your buffer, so there's 3 stages to trading with Apex. Stage number 1 is passing your eval account. No rules, but passing and hitting your target goal of $3,000 on a 50K account. Stage number 2, open a PA account and build yourself out of that buffer zone of $2,500. So you want to take your 50K account and build it up beyond 52,500. Now you enter stage 3. Anything in stage 3 you can withdraw, and you don't have a trailing drawdown anymore. Your trailing drawdown is gone because it's anything. Your trailing drawdown begins anything less than $52,500. So when I'm at $53,000 and I lose $500. So in other words, when I'm at $54,000, my trailing drawdown maximum, or my drawdown maximum, is going to be $4,000 because you built yourself out of that $2,500 buffer zone. So when I'm at $55,000, I have a $5,000 max loss limit. That's when my account would be blown, because your max loss, or your $2,500 buffer zone, stops at $52,500. So think of it as 3 stages. First stage, just pass the eval account. Stage 2, reduce your size and get yourself out of that $2,500 buffer zone on your performance accounts. Stage 3 is build that buffer even larger so that you don't have any issues with your unrealized, the 30% unrealized gain rule. Because once you hit $55,000, it goes from 30% to 50%. In other words, just don't oversize too quickly. If you oversize too quickly, all these things we're talking about in percentages start playing a part of your trading. But if you're only trading 5 micros, you're not going to see that issue. And the big perk of Apex is they allow you to have 20 accounts. So I traded 2 micros. I traded 2 micros today. My account is at $233 right now. I'm at $233 on this particular account. Now that's copied on different accounts. If I had 20 accounts, which I don't, $233 times 20 accounts, that's $4,600. You don't need to make a lot of money if you can have multiple Apex accounts. So it psychologically just makes it easier in my mind to have multiple accounts and trade smaller size. So now that we ran this swing low, we never came back up to this breaker. So I'm not really looking to take a trade. I'm just letting it just do its thing. And look look at the wicks in the candles, how much they're overlapping right now. So we're at 10:30. I want to wait for price. I want to wait for time. I want to wait for around 10:45 to 11 o'clock. And then I'm going to look at see how price is reacting. If we jump to the 2-minute, 3-minute, 4-minute, 5-minute, we have no fair value gaps under 5 minutes. And this is our last one right here. This is our last 1-minute fair value gap before we have the swing lows. I'm not sure we're gonna make a lower low. I could be wrong, but we'll see what happens down here. Now, if it comes back up to this breaker, that might be an opportunity. I like how aggressive this candle is. It kind of scares people. I doubt we're gonna get up here in one candle. It could be, but this would be. I would be willing to take a quick reaction trade on that. Basically it coming up to about right there.
Order submitted.
Now, if I'm only interested if we pump right now to that level. If we don't and we run lower, I'm gonna close this idea. I'm only doing this based on the next candle being aggressive and hitting that level. This is for a short. I called out this trade idea earlier when I said I wanted to run this low here, and then I wanted it to come back up to this level. Just for a nice 20 handle win. If we're not going to expand here and it closes lower, I'm just going to take this idea off right now. I'll give it a second to see if it expands right here aggressively, but if it doesn't, I'm just taking the idea off because it doesn't make sense to do it. And I might even move it a little bit right here, right to that high. I'll move it to the 1021's high right now. So that's where it's at right now. I want to see it hit it right now. It needs to do it right now if it's going to take it. Oh, come on.
Order submitted.
All right, let's see if it reacts here and gives us 20 handles. This fair value gap right here and this breaker is our last shot. So now that we're going lower, I'm going to get ready to pull my stop loss to break even. But I need to see it react here. It doesn't look like it's going to do it. Nope, it's going to push right through it.
Order canceled.
All right, so that's my one loss for today. That means I'm going to be done. Actually, I said I'd take two, but I think I'm going to be done. There's no reason for me to take another trade. So now, how are we really couldn't predict that it was going to push right through. We had the idea. We had the higher time frame 5-minute fair value gap that we wanted to base it off of. We had the breaker. It's just a trade that didn't work out. It's a trade idea that just failed. And those are going to happen. How we handle it afterwards is going to be very, very important. How you, if let's just say you took that trade, I don't know if you did or not, but how you handle yourself after that opportunity is going to be very important, because I'm not going to get everything right. If you've been with me for any amount of time, you know I don't get every trade right. But how you handle yourself afterwards is very, very important. Now, this looks really aggressive. Very intentional. But because of that loss, I'm not going to now say, oh, I'm switching sides and I'm going to go long right now. No, I'm going to close my account. That's probably what I'm going to be. Because I know what happens when I have a loss, and I'm like, oh, well, it didn't do what I wanted it to do. It must be going the other direction. So let's switch gears and let's go long here. And then it just comes back and crushes me. So I'm not going to take that. I'm not gonna participate in that. I'm 2 for 3 and up nicely. I'm not gonna let it erode my profits. Let's see. Luke, at time of payout request, just do not have a single trade over 30% of the... Yeah, I agree. They require you to trade for more days until you bring your highest day below 30%. Yes, before your total amount. Agreed. Luke, a screenshot from the Apex 3.0 update that John posted in his video. Tony, there was a 5-minute breaker at 8:15 that played out. Short or long, I saw that. There was a 5-minute unicorn. Yeah, but it came back up to it. This is what I'm saying. It could stay in here, respect it. It could respect this 5-minute and then come down later. It was just unfortunate that it decided to blow right past us and not really run the highs. It swept this high, but it didn't run these highs right here and blew right past our breaker. That happens from time to time. Adrian, I personally don't trade on Mondays because of moves like this. Yeah, I mean, I totally get that. But at the same time, Monday, beautiful setup right here. Beautiful breaker. Hit it at the tick. And then drops. We took this trade. But I mean, that's how the precision of these breakers at times can do that. So when I'm setting this up, I'm thinking this level right here, I want it to hit it and react and run the other way. But once you're in the trade, you're not going to just get out and bail, because we do have this fair value gap that's right here that it could reach up into. So we just have to let the trade play out. We let the trade play out. I traded the idea. I had my plan. I had my breaker. It made sense on why I wanted to take the trade. It just happens to do one of those, you know. Jordy, pro tip, kids: slower grinds are usually engineered liquidity. Faster moves are grabs. Matt, take profit trader, 5 days to pass evals, 50% consistency pro account, get a buffer, then daily payouts 80-20. Matt, I don't see any difference other than the consistency rule compared to Apex. And then Apex gives you their first $25,000 on the account at 100% value. So Apex, compared to that, has a 1 day to pass. It's a 30% consistency rule for the pro account. Once you get to the buffer, you can get daily pay, or you can get payouts every 8 days, and it's 100% profit up to your first $25,000 of profit. Tyler, last question. Can you stay on funded accounts and maximize profits with more accounts and they'll move you to live? Here's my honest opinion. I don't think they have a live account. I don't know anybody that has ever made a live account. And I watch a lot of different people on their Apex accounts. Now, I'm not a $1 million trader, so I'm not making $850,000 on my Apex accounts yet. I'll get there. That's why I have these sticky notes on my screen to remind me of my rules to get there. But you don't have to worry about me moving to live account. Focus on today. Focus on being consistent today and tomorrow and the day after, and you'll see success. If they move you to a live account, I mean, that's a new problem to have. It's a new problem to have. All right, so look at the breaker that we marked out. The breaker actually turned into a reclaimed breaker. It's a concept I don't talk about too often because I really don't like taking them. But we have our breaker here. It broke through it and reclaimed that breaker. Now, that reclaimed breaker also overlaps with this small breaker right here. This bullish breaker right there. So you got a bearish reclaimed and a bullish breaker overlapping with each other that price found resistant or found support at, and now it's hanging inside this first fair value gap. What is the buffer again on a 50K? The buffer is the area of price action of you getting out of your drawdown limit of $2,500. So it's from $50,000 to $52,500. Once you're above that, you don't really have, there's really not much more issues. It'll be pretty easy as far as trading, as long as you're not making giant losses, as long as you're not having a 30% unrealized gain issue. Thank you, sir. Adrian, appreciate it. All right, so I wanted to take a minute and I wanted to talk about some journaling and something that has been really helpful. So I mentioned to you guys earlier that when I'm journaling, I hate writing. I don't like to write. So I use Google Docs for my journaling. And if you go into tools and you use voice typing, you can now just click this button and it will start writing everything for you. So this is how I do my journaling. I do my journaling where I'm talking out my day, my trades, how I felt, what I thought, all of that. I talk it out instead of writing it out because I really want to get my unfiltered thoughts on paper. I just want to talk and put my mental energy on how I felt in the process. I can express, like for example, if I wanted to talk about my 3 trades today, I could talk about how I felt confident on the first one. I was able to identify the breaker before the market opened. And it's one of the few times that I felt very confident that that breaker could get hit. And I ended up taking that trade. And it writes it out for me just like this. Now, at times, you're going to want to click that button so that it doesn't, if it's on too long, it will stop writing. So then I'll just go and click it again and keep talking. I'll talk about my second trade where we did the inversion to the upside and I reduced my size because we had a large stop loss and we had a 27 handle target and it played out perfectly. I could also talk about how I really should have held a contract to go higher because the market hit a big key level on a weekly time frame and I should have held a contract to go higher. So then it's writing all of this out for me, right? What I do is then I take this brain dump, this unfiltered journaling entry, and I will do 2 things with it. I will drop this into ChatGPT. I will ask ChatGPT to rewrite this for me with my voice still intact to make it clear and concise. And it will give me a beautifully worded journal entry, and I could drop that in my journal for my future review later down the road. The second thing that I've started to do, and I'm really enjoying it, is I'll take this journal entry again and I'll drop it into ChatGPT and I give ChatGPT some guidelines. I tell GPT, I say, hey, I want you to be my day trading coach. Okay. And I'm going to give you a journal entry and I want your recommendations on what I need to focus on for this upcoming week. So I'll collectively give it Monday, Tuesday, Wednesday, Thursday, and Friday's trading journal entries, and I'll ask it to give me his coaching recommendation on what I need to focus on in the upcoming week. And it will spit out an answer. It'll give you the 5 things you need to focus on. And it's very helpful to have clarity as a trader learning to become profitable. You need clarity. Many traders, I'll speak for myself. When I started out as a trader and I had losses, I couldn't wait to move past my losses and get back in the driver's seat and try again with no new information to help me get better. I lacked the value. I didn't see the value in journaling my entire experiences and then finding clarity on a strategy to help myself get better. I wasn't getting better. I was just doing the same thing over and over. And all of us have heard the definition of insanity. It's doing the same thing over and over again with no different result. So if you're experiencing your trading being stagnant in this place where you're not seeing the growth that you want to, well, I'm going to submit to you that this is due to you not having clarity on your next steps. Clarity on actions that you need to take moving forward, or having just a clearly defined plan based on past experiences. Well, AI, the creation of this tool has made it significantly easier for us as traders to now have a personalized coach based on your own journal entries. This is why it's so important to talk about how you're feeling, what you thought. Did you get out early? Did you get scared in a trade? Did you revenge trade? All of these things, you're just throwing it on a piece of paper. And then you let a tool that has the capacity to filter and organize and consolidate and give clear responses help you put together an action plan for the following day, for the following week, whatever it may be. You can decide. It has become a tool that is becoming invaluable to me because I want information. Your value as a trader is in your ability to have information, clear information, and then be able to make decisions based on that information and that data. TradeZilla is a great example. TradeZilla is all programmed in there for you to drop your trades in there, and then it spits out, hey, it looks like your average trade for these is 4 minutes. This one was 10 seconds. That could have been an impulsive trade. It's coded in there. Well, when you're writing your journal entries and you're writing them in an unfiltered way, ChatGPT can then give you some guidance on what to focus on in the following week. So for me, what my guidelines was following my trade plan, not taking any impulsive trades, giving myself a 2 max loss limit and walking away. Those were my 3 trades. Those were my 3 areas of focus. And then it gave me some affirmations for me to use and to say on a daily basis. Now, I already have my affirmations. I'm already saying my affirmations that I want to say on a daily basis. So I just discard that part. Or maybe it's like, oh yeah, I could actually add this to what I'm already doing. But using ChatGPT as your day trading coach is the cheapest way for you to get clarity and guidance in your own trading journey. Now, you don't need a coach. You could use ChatGPT if you're disciplined and you can follow your rules. You don't need a coach. Now, you may want a day trading community, right? You may want to get the tools and the strategies that you can implement, but at the end of the day, you're going to be the one clicking the button. And having a quote unquote coach there to give you clarity on what your next steps could be or what you should focus on is invaluable in your journey. And it has been very, very helpful for me. I would say it has such a novelty to it. I mean, who thought you could have an AI be your day trading coach? I mean, the truth is traders, brand new traders are looking for the golden nugget. And the reality is they just need to work on consistency on the things that they already know they're supposed to do. If that's the truth, which I believe it is, that means ChatGPT has the information to help you to become successful. There's no new strategy in the sun. You could take a break-even strategy and you could become successful in it if you were following your rules that you set in place. So rules, consistency, patience, all these things, we know it. But if we can get just that little extra clarity on how to implement it, what we should focus on this week, and I'll do that every week. I'll drop in all my journal entries into ChatGPT for this week. I'll drop them in there. And then I'll say, hey, what are your suggestions on areas of focus for me this week? What do I need to pay attention to? What were my weak areas based on my journal entries? And then I don't have to review everything, and it starts giving me some clarity very, very quickly. So I wanted to touch on that because I think it would be very helpful for traders. So yeah, hopefully that's helpful. If you thought it was helpful, hit the like button for me. Let me know, please. See how we're still sitting in this 5-minute fair value gap? Yeah, I'm going to be done trading for today. I think there's a chance that we bust higher here. We're in the 11 a.m. macro right now, and we have relatively equal highs. Honestly, this doesn't look like a bad trade here. This inversion. I already have all my accounts closed, so I'm not taking anything. And I'm not recommending you take anything either. I'm just saying, here's an inversion. Here's equal highs. We're right at the macro time. If it could potentially play out. Let's see. All right, so there's the close. Let's see if it runs for the high. Our entry would be right here. Our break even would be, Our break even would be right here. And our stop loss is a close below that level right there. The only thing I don't like about it is we're inside of this consolidation, right? That's the thing I don't like about this. But the time frame it's the right time. It's the right time for something to start moving out of this range if it wants to. We swept liquidity here in this candle, and in 2 candles we closed above it. So it has the characteristics that I look for in a trade. 7 seconds, and if it closes below that fair value gap, you close the trade. All right, so trade is still inside that range. The other negative is that we're literally playing lower time frame targets, which is void of higher time frame draws on liquidity, right? We're playing it solely off the idea that we have these relatively equal highs all right here, which is not a bad idea. But having a higher time frame perspective is going to be important. Now, I think that we see higher time frame because we didn't go lower. We had a failure swing here, and we hit the weekly time frame down here. So we have reason to suggest a move higher. The work is in identifying the right time for that trade to play out, right? So we're assuming it's going to be right now, and this trade is still active. I like these. I do like that, those relatively equal highs right there. The trade becomes, let's see, it's an 18 handle stop loss. We're not saying we're only looking at the close of the candle. So we still have 16 seconds. We have to wait 16 seconds before we close this trade. So even though it's below the fair value gap, we're still waiting to see if it closes inside it or below it. 3 seconds. Okay, see how it closed inside the range. So now we have to wait another 55 seconds before we close the trade. Now, if you were like, well, what if it just drops all the way? Well, then you need to have a hard stop loss. Maybe that stop loss is at this swing low. Maybe it's this one or this one. Let's just say our hard stop loss is going to be this swing low, because that's when the trade would be invalid. So we have a hard stop loss of this swing low. We have the fair value gap right here. If it closes in the next 25 seconds, then we close the trade when it closes below that. Other than that, we're going to let and give this room to breathe for us to move up to these equal highs. So we're managing our trade appropriately and not closing it prematurely. We got to ignore the wicks, because the wicks are what does the damage. It's what scares people out of trades. All right, we have another close inside the range, and we have another 50 seconds that we have to wait now. So we're going to let it wait. We're going to let the trade play out. Now we have two options. Assuming we hit this high right here, we can take our profit at 14 handles, or we can move our stop to break even at this point and target a higher level. Right? We could do this swing high that's up here at this breaker. So we have this swing high, which is the breaker, and we could target that potential swing high if it's going to go. I don't know if it is or not yet. We're going to see if it plays out. It's about 11 seconds till 11 a.m. So everything's looking like it should go higher. We'll see what happens. All right, so here's another candle. We're probably going to push really quick. I would say we probably push here. We're still inside the fair value gap. As soon as we hit this swing high right here, we're moving. Where is it? Let's just do that. All right, so now our stop is to break even. Our stop is now at break even, and we can either take profit or we can hold for a bigger move. Okay? That's up to you. If you did multiple contracts, well, then you want to take a contract off because we made equal highs here. All right, so there's the push through, and now we're holding for the bigger move. Okay? We have a swing high that's sitting at this breaker, and that to me is going to be the target. That to me is the target. So I'm not in this trade. I'm not taking this trade. I've closed all my accounts. I'm going to be done for today. But this would have been a nice trade to be in. If this does not close above the last candle, then you might want to take profit. Struggling to get over the 930 level. See how the bodies have all closed below 930? That's not necessarily a good sign. We need to see this next candle really close above 930. This is a beautiful example of how waiting and not closing the trade prematurely when the trade was down here. We followed the rules and didn't get out. Didn't let our emotions dictate what we did. Our stop loss is at break even. We should have taken some profit up here. Gave us 15 handles. Oh no, actually I take that back. It gave us 25 to 30 handles. You could easily gotten some profit there, and there is our stop out. So we would have been stopped out at break even for the remainder of the trade, but in that process we were able to get 30 handles in that trade. Now if you were convinced we're going to see higher prices, you can make the subjective call of keeping a solid stop loss of 10, 20 handles, whatever your stop loss limit would be, because this may still, I can't tell you how many times I've had an inversion get stopped out at break even and then just explode higher. That happens, but that's just part of the game. You're going to get stopped out at times. So if you're convinced on something like that, you can not move your stop to break even and see if this trade really wants to play out. Give it space to actually move. But in this case, if you're happy with 20 to 30 handles, this trade gave it to you. This trade gave it to you. It ran our targets, and we can call it a day on that. Let's see if this turns around. If you had your stop at break even, you'd be stop out. You could keep that fair value gap as a close below this fair value gap invalidates the higher time frame or the bigger move that we're hoping for. Sorry, I didn't realize that screen was still up. I was just sitting in the way there. Sorry. If you guys are appreciating the commentary and the reading of order flow, hit the like button for me. I greatly appreciate it. Look at that. Let's see if it goes higher. I have to make a phone call, guys, so I'm gonna sit here watching this, seeing if it hits this breaker. I do need to make a phone call real quick, so I'm gonna mute this, and then I'll be back here in a second. It's looking pretty good here, folks. Being patient is everything on this. Okay, folks, we're back at it. It took a second. The person I had to talk to was a client, and that person likes to talk, likes to chit chat. All right, so we ended up running this low. We swept liquidity and then turned around. This is indicative of indecisive price action where we're inside of a range. Okay, what range are we inside of? Okay, we're inside of this high to this low. We're sitting inside it. And when we have a range that we're playing in, price does all of this stuff just back and forth. And it's hard to go for those bigger moves. It's hard to go for those bigger moves because you got this and you sit in the trade so much longer. So it's just better to go for 20 handles and be done. So I would have for sure ended up closing that trade when we ran these highs, and then I would have missed this trade right here. But you can see we ended up pushing through this, hit the breaker, we hit midnight open, and now I think the equal highs could be inside the scope of hitting. Alex, yes, I apologize. I was on a call. Joseph, how you doing? I was muted there for a second. I had to take a phone call. But honestly, guys, I don't think we're going to be on here much longer. Price is going to probably run up to these equal highs. Here's the thing I'd be careful about is I would treat this wick right here as a rejection block. Watch this wick. Okay? Watch that wick. This wick is at 9 a.m. Mark 9 a.m. and drag the high and the close price of that candle and drag it to the right. And let's see if price wants to reject this rejection block. The reason I'm bringing that up is we've done that multiple times this morning. And if price doesn't want to run this and wants to save these equal highs and the London high for later in the day, you could get a rejection right here and then it come back later. We'll find out right now. Look at the wick right initially. Look at that wick. Look at this wick, guys. Almost to the tick of the midpoint of that rejection wick that I just pointed out. Okay? Heck of a reaction there. I'm not saying that doesn't mean we're going to not hit this. I'm just saying that's a heck of a reaction to something that nobody would really ever put on their chart. See that? That's the wick. We just marked that out. Now let's see how price plays. So if you were taking this trade, it would almost be better to mark out the midpoint of this wick and take profit at that point. Look at that. Oh man, I'm honestly a little shocked myself right now. I'm a little shocked myself. Heck of a rejection right there. Because that means we potentially could go all the way down to the midpoint right here. Which, look where this midpoint of this range overlaps with. It overlaps with this breaker. We got a breaker right here. This is a bullish breaker. So does price come all the way down here? I don't know. Maybe. I think it might. It's 11:26. But we'll see if it wants to run this right now or not. I just thought that was amazing that it hit that. I don't do a ton with rejection blocks, but this is just maybe changing my mind. Holy cow. That's crazy. That's literally to the tick. JB, how you doing? Up 400 ticks for the day. I'm so glad you're doing well. Nice job. So why did I mark out this rejection block? One, we had a sweep of liquidity right here. Okay? We have a sweep of liquidity right here. But if price really is not going to want to do it right now, that's where it would reject. I'm going to get rid of that breaker. I think that's irrelevant now. And now let's see see if it finds support at midnight open. But we definitely have reason to move higher here. But I would be watching this breaker. I'm not saying you take a trade here. No, we're just watching it for order flow. I'm kind of just sitting here seeing if we're going to hit this breaker and how it reacts here. But as I shared before, I'm done. My accounts are closed on the day. So it's respecting the breaker so far. If it doesn't want to respect the breaker, we have a lot of low resistance liquidity here. We got a low, 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 and low. All in here. I actually think today's the last day that they're doing the 80% off sale, just FYI. Apex right now, so if you wanted to grab an eval or two before that 80% off expires, you can do so. The DTJ code will give you that discount. We're respecting that breaker right now. It's hard for me to think that we're just going to go straight back up here. To me, I think we're going to do something like this. It just doesn't make sense for us to nice straight line, nice straight line, nice straight line. It just doesn't work that way. So either we continue lower or we get something like this and then we explode higher. That's kind of what I would look at. These are the worst ones to be a part of. I mean, if you got patience, these will be fine. But it would be nice if it just explodes higher. We'll see if this candle doesn't. That candle, I mean, honestly, that's surprising me a little bit. How aggressive that candle is. Closed green. Yeah, that's pretty aggressive. If it's going to be this aggressive, we might see a lot higher prices. I would like to see this level hit at some point this week. This is going to be my... We'll see if Tuesday wants to make this level. I will not be on Tuesday morning, or tomorrow morning. I have a closing, a real estate closing that I have to be a part of. So I won't be on, but this is the level for those that are going to be on tomorrow morning. I would be watching this level here. That's the midpoint of Friday's range. Simple trader, no, I've closed everything right now. I'm done. I went 2 for 3 for about 50 handles. Thanks, Alex. Yeah, I mean, you can look at if you take a look at the weekly chart on this contract, we swept September 3rd's low on the weekly. I mean, that's a big level there. So we really could see an extended move higher here. And the target is going to be Friday's equilibrium. That level right here. So mark on your charts 19,685.50. That's where price will probably go to in the next couple days. And my goal is to find a move for that. So if I had to go back and look my analysis on this, this was a poor analysis in regards to the one loss that I had. I shouldn't have taken this trade right there. It's just, even though I had a hourly continuation model, even though it was respecting the 5-minute fair value gap right here, even though we had a breaker to the downside, what is the one thing that should have disqualified that whole idea? I talked about it, I pushed it aside, and I said that we could still potentially go lower. But every time I've done, not every time, but a majority of the time that I do that, I would say it doesn't really, I probably feel it more than I win it. I probably lose more than I win at the end of the day. I've seen trades, I've seen this work out, especially if we get a continuation lower. But this level right here, really, that's September 3rd, guys. That is really the misanalysis on my part. That there should have been my clue. I even talked about it, but I decided to take it anyway because I had the idea here. I called it out here. Bad analysis, yes, but still the same. You had an analysis, and this is going to happen. You're going to have an analysis on a trade. You're going to have an idea. You're going to want to see it play out. It's not. You're going to go back at the price action, and then you're going to be able to say, well, yeah, that was dumb. Why did I do that? This is the stuff that you want to journal so that you can reinforce the idea that when I see a key level like this, I'm going to pass on trying to trade against that rejection of this level, or that sweeping, as we see right here, the sweeping of that level. So I should have looked at this as a no-go, and I really should have looked for a long. Now, we ended up taking that long right here, and it was a winner for 20 points. JB got 400 ticks. Way to go. She crushed it. So here's our sweep of the highs, finally. Rejection block, then swept it. Now we want to see it find support at this equal high here, and we want to see it expand to the London high. I hope it doesn't run for Friday's equilibrium level. Honestly, I think where it's going to go is probably somewhere in here. We got previous day low. We got the new week opening gap high, new week opening gap low. And then we have our opening range gap sitting right there. So, folks, we're going to call it a day there. Blake, Restoration. Hey, Tyler, in a brand new Apex account. It starts at 50,000. I need to limit my profit to a max of 780 per day, right? You're going to take your profit. You can't go more than 30% of your drawdown limit, which is $2,500. So $2,500 times 30% is $750. So you don't want your profit to be over $750 until your account or your balance exceeds $52,500. When your balance exceeds $52,500, you're now going to take your balance divided or multiplied by 30%. So in other words, let's say you're under 750 for the first 3 or 4 days. Okay? Now your account is sitting at $53,000. So now you're going to take $3,000 times 30%. You take $3,000 times 30%, and here's what it is. You got $3,000 times 30%. Now you can't make more than $900 in a single trading day. Now when your account gets up to $55,000, you're at $5,000. Now it goes from not 30%, but it goes to 50%. So now you can make up to $2,500. You really don't have it just eliminates the rule. They just brought in the rule once you have your buffer. So just follow that. Keep small size when you're building that buffer account and you'll be fine. All right, folks. We're going to call it a day there. God bless. Stay safe. Hit the like button if you haven't. Thank you for watching. We'll see you guys all. I'll probably do a PM stream tomorrow. If don't see you tomorrow, we'll see you at Wednesday morning, 9:15 a.m. Stay safe. God bless. We'll talk to you later. Bye-bye.